Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Apple reveals its AI play, the iPhone maker announcing a partnership with OpenAI and a slew of new features. Elon Musk, though, responding by threatening to ban Apple devices from his companies over security fears. The S&P 500 closes at another record high as investors turn their attention to the Fed, with the FOMC beginning its two-day policy meeting today. Plus, British Prime Minister Rishi Sunak's cabinet lobbies him to add last-minute big-ticket tax cuts to his manifesto amid growing disquiet over a lack of show-stopping announcements. This as we count down to the latest wage data here in the UK. Let's check in on these markets then. A challenging day for European stocks yesterday, but we did have those US gains coming through. A fresh record for the S&P. Semiconductors, particularly Nvidia, coming to the fore in terms of the strength that came through there. On the back of that 10-for-1 split, Apple, though, falling close to 2% in the session yesterday after revealing and unveiling those new AI features. European futures looking to make up some of the losses of yesterday, pointing higher by 0.2%. Of course, the CAC, Garant over in France, fell more than 1%. So we look in on French equities as well, given the politics of that country. FTSE 100 futures currently flat. US futures, the S&P looking to lose about 0.1%, given the records that came through yesterday. Maybe a little bit of profit taking, or standing on the sidelines, of course, ahead of the decision from the Fed and the inflation data tomorrow. Nasdaq futures pointing lower by about 0.1%. Let's flip the board and look cross-asset. Yes, it is the focus in the UK on wage data, but again, we switch focus to CPI and inflation out of the US a couple of hours before that Fed decision. And again, investors will be scrutinising any adjustments to the forecast from the FOMC, the dot plots, given that in March the expectation was for 3 cuts. If they adjust that lower, 2, 1, possibly 0, how will the markets react to that? The US 10-year at 4.44, euro-dollar at 1.07 after the losses of yesterday on that announcement from President Macron. Brent currently at 81.52. We look ahead to an OPEC oil report later today. Gold, 2,303 on the yellow metal, down 0.3%. Let's cross over to Asia, where Avril Hong is standing by in Singapore for a check on the markets, and it's looking challenging in China. Back from a holiday, Avril.
Yeah, back from that holiday, and Chinese as well as the Hong Kong benchmark are playing catch down. Look at how we're faring on the CSI 300 and the Hang Seng amid those lingering concerns surrounding the real estate sector. But I think increasingly the concerns surrounding how Chinese firms are really in the crosshairs of US as well as EU lawmakers. I'll talk more about that in a bit. But the other thing I wanted to highlight is how we're seeing the outlier in the Nikkei today. This is helped along by the chip making related stocks that are tracking their US counterparts overnight. Okay, let's flip the board, because as our MLive colleague Mark Cranfield has been writing about on the blog, there's an interesting dynamic that's been emerging of late. It's centered around the stock of CATL. This is a major Chinese battery maker. That stock has tumbled about 10% in the past 2 sessions as a group of US lawmakers seeks to put it on an import ban list. And to be clear, this is not a stock that figures on the Hang Seng, but it is a big stock in the Greater China space. So as traders seek to reduce their exposure to limit losses, you're kind of seeing these knock-on effects. The other interesting thing that I wanted to highlight is how we're seeing that divergence in the Hang Seng and the S&P 500. It's happened a couple of times in the past 2 years, and each time this has happened, it didn't bode well for the Hong Kong benchmark. Let's flip the board, because I also wanted to talk through what we're seeing among currencies. It's pretty range bound ahead of those key events later in the week. A couple of things we did want to highlight though. Dollar yen is breached the 157.2 level now, moving closer to 157.3. Onshore yuan also hitting the weakest level since November last year. But as I say, overall, it's pretty range-bound ahead of the US CPI as well as the Fed dots. Let's flip the board again, because we are not just watching out for the stock of CATL. It's also about the Chinese EV makers as we watch for that potential decision on EU tariffs. And the other bunch of stocks we're watching, those Apple suppliers, after that AI event failed to inspire some investors or to allay some of the concerns surrounding iPhone shipments. These are the stocks that are on the back foot today. Tom.
Ava Hong in Singapore. Thank you very much indeed. With the Asia market check ending there on Apple and the ripple effects of the Asian markets, and staying technology but shifting to software, because the French IT company Atos, which of course has struggled in terms of its financing, is reported now to be has decided to accept an offer, a rescue deal, a rescue offer essentially from the French IT company OnePoint. It had two competing offers, one from the Czech billionaire Daniel Kretinsky and another from the French IT company OnePoint. According to the lines crossing on the terminal right now, Atos says it has decided to proceed with OnePoint's proposed rescue offer. So we'll wait for more details on this, and we will continue to keep across this story for you and bring all the context over the next few hours. That is Atos, 1 year down, of course, 91% challenged in terms of its financials, but now agreeing, it seems, or looking to accept that offer from OnePoint over in France. To Apple, more details there, unwrapping then its long-awaited suite of new AI features. The countdown had been there, hadn't it? Including a partnership with OpenAI, the maker, of course, of ChatGPT. The iPhone maker betting that a personalised and understated approach to the technology will win over customers. It is a high-stakes bid to catch up with rivals in the booming AI market.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
OK, let's get more on this then with Matt Bloxham from Bloomberg Intelligence, who's been covering this for us. Matt, did Apple at this conference do enough, do you think, in your assessment, to convince investors, its customers, clients, that it is now on the front foot when it comes to AI? The stock was down 2%, not entirely unusual on the back of these events. That happens historically fairly regularly with Apple. Yeah. But longer term, they managed to come through with conviction on their AI products?
I mean, I definitely think it's a big step in the right direction. It's an incredibly slick presentation, as I expect from Apple, and a very sophisticated integration of generative AI into all of those familiar tools you use if you're an Apple ecosystem user. So, I mean, obviously the shares are up almost 20% over the last couple of months. This was an incredibly well-flagged event. We didn't hear anything yesterday that hadn't been written about at length for the last, certainly, month or two. So there wasn't anything incremental, though. So the big question remains. Everybody's thinking, is this going to trigger a smartphone upgrade supercycle? Are people going to be rushing to buy an iPhone 16 when it comes out in September, October time? That's inevitably laden with all these features. You can get this technology on the iPhone 15 Pro and Pro Max. There's a very limited number of people out there that have a device today in terms of a smartphone from Apple that can support this technology. So if you really get excited about the stuff, you want to be able to play with it on your phone, you're going to have to probably, for the most part, buy a new phone from September, October time. So I think that's really why the shares have gone up. If we're thinking this is going to drive a negative revenue trend in iPhone sales into a positive one, and that's certainly what the market's already expecting for the next 12, 18 or months.
OK, so we'll monitor towards the end of this year whether or not there's a big pickup in terms of sales as people look to upgrade potentially on the back of some of these features. This is really intriguing. Elon Musk putting out a tweet, or an X, on X and the platform, saying that he would ban iPhones, Apple products from his businesses if indeed they have partnered with OS and OpenAI. Is this petulance from Musk? He's taking a leaf out of China's book, where they've banned iPhones from many state-owned enterprises. What's going on here? Yeah, I mean, it kind of seems quite impulsive, doesn't it, to kind of this knee-jerk reaction of, if they announce a relationship with OpenAI on ChatGPT, he questions if it's going to be deeply integrated in the operating system, and if so, that would present a very big kind of privacy concern. I mean, obviously, he's within his rights to kind of say we don't want these devices on our networks at Tesla and SpaceX and elsewhere, but, it feels opportunistic with the timing. We've known that they were going to do this partnership for at least a week or so now, and
he could have come out earlier and said, I've got concerns about this. He waits till the day that they announce it. He's trying to get some of the spotlight. I mean, he's got history with OpenAI. They're quite tense. He's developing a competitor to OpenAI. So this is a great opportunity for him to kind of get some spotlight and kind of advertise essentially what he's doing. And he does have lots of legitimate concerns about how we develop generative AI for the good of humanity, not to the detriment of humanity, but it's clearly wrapped up in lots of other commercial interests and just generally his own view on life, which he's very happy to share with people on a daily basis.
He certainly is. One of the founding investors, of course, of OpenAI as well, back in the day. Matt Bloxham, thank you very much indeed, from Bloomberg Intelligence, breaking down what we saw and what was unveiled by Apple and the response from Elon Musk. Let's switch focus to the macro now. June's Fed meeting, of course, starting today. Bloomberg Economics expects this meeting to be one of the year's most pivotal, potentially providing the clearest hint yet to the rate cut timetable. Joining me now for the analysis is Bloomberg's MLive strategist, Mark Cranfield. Mark, talk to us about the equity market reaction, sensibility to the Fed decision and any changes to the dot plot.
Well, this is a great opportunity. If the Fed want to be a bit more hawkish than what the equity market is expecting, now's the time to do it. Effectively, they're going to do a mark-to-market on their dot plots. So they said 3 cuts at the beginning of the year. That clearly is not working out very well because the economy has been so strong. Inflation's been too high, so they need to revise it. How far do they revise? Well, the equity market is giving them the opportunity to actually be pretty aggressive here. They could go right down to 1, maybe even 0 on the dot plots because the equity market can withstand it. It's been so strong, partly on the AI story, but in general, if you look at the performance of US equities this year, it's really been astonishing. So if the Fed does come out and be a little bit more aggressive, now's the time to do it because it probably won't disrupt the equity market very much, maybe knock it down a couple of %. But within the context of where we've been over the past 6-12 months, that's nothing really. So definitely, equity market is giving the Fed a window. Let's see whether they take it.
OK, this market can take a move from 3 to 1, possibly from 3 to 0. What about the dollar, though, Mark? How much is priced in to the dollar at this point?
Probably not enough, because this is also an emerging market story. It's not just about the Fed as well. We've also got the Bank of Japan. Now, the Bank of Japan is expected to be unchanged when they meet on Friday. That's probably going to be a negative for the yen. Dollar yen could easily end up back towards the top of the recent range, which is around the 160 mark. If the dollar's going up against the yen, that will lift the emerging market world again. We've always seen some action today. Mexican peso's under pressure. Chinese currency on the onshore side is as weak as it's been for some time. You can see the pressure is building up. And even the Indian rupee as well hasn't come through the elections that well. It's still on the soft side. So clearly, the dollar story is more than just the G10. It also depends on Japan. It depends on the rest of the EM world as well. So even if the Fed doesn't disrupt the market too much, by the end of the week, the US dollar could still be quite a bit stronger. And then you throw in the French election risk as well, which is clearly a euro negative. All in all, US dollar needs to price in a bit more upside.
OK, Bloomberg MLive strategist Mark Cranfield on the relative resilience of this equity market, but maybe more to be priced in to the greenback. Mark, thank you very much indeed. Here's what else to be thinking out. Today, then, this Tuesday, 7 a.m. UK time, we're going to get the wage data, the earnings data, and ex-bonuses. The number is expected to come in actually above the previous reading. That could pose a challenge for the Bank of England. That is at 7 a.m. UK time. We will, of course, break that for you live. Then, of course, today, the FOMC meeting beginning. We get that announcement and the decision, of course, on Wednesday, and Mark has articulated what to be looking at. And later, that OPEC monthly oil report as well. As Brent sits at around the $80 mark, still up about 5% year to date. We'll see if that report outlines a picture of improving demand for oil. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, the United Nations adopts a US-crafted truce deal as Secretary of State Antony Blinken arrives in Israel. More on the ongoing ceasefire talks next. Plus, New Quantum's founder and CEO says the UK is emerging as a world leader in quantum computing. We speak exclusively to Carmen Palacios-Berraquero about what is needed to stay ahead in that field. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the United Nations Security Council has voted to support a US-crafted Israel-Hamas ceasefire plan. The proposal sets out conditions for a temporary truce, hostage prisoner exchanges, and eventually the withdrawal of Israeli forces from the Gaza Strip. The resolution passed 14-0 with Russia abstaining. Let's bring in Jumana Pasechi then, our Horizons Middle East and Africa anchor. Jumana, what do we know about this UN resolution, what the implications are, and what the votes suggest international support for this resolution is looking like at this point?
Yeah, Tom, so we know the resolution actually passed at the Security Council 14-0, as you highlighted, with Russia abstaining, all in support of this U.S. ceasefire proposal that was put on the table by Joe Biden on May the 31st. It does tell you that there is growing momentum around the world to endorse this truce proposal, and it indeed tells you that at a worldwide level, many of the countries within the UN would like to see a ceasefire deal pushed and passed across the line. In reality, though, Tom, the UN has taken a backseat since October 7. There have been multiple pushes and calls for ceasefire deals. And actually, it wasn't until about a month ago that the US themselves signed on in support of a ceasefire deal. So it's unlikely to affect how things actually manifest on the ground, but it is significant that there is growing worldwide momentum around this Biden proposal.
Meanwhile, US Secretary of State Antony Blinken on the ground in Israel, once again putting the pressure on the Prime Minister Netanyahu. What has he been telling his Israeli counterparts?
That's right. So the U.S. Secretary of State Antony Blinken is on his 8th trip to the region since October 7. He met with the Egyptian President Sisi yesterday. Today he's in Israel. He also met with the Prime Minister Netanyahu towards the evening yesterday. Will there be more announcements expected today? And essentially what he's trying to do is shore up support for pushing through this truce agreement. And it should be said here that both sides have said that they do want to continue the discussions. The issue, as we've been flagging, is that it is a three-point deal. The first part of the deal would entail a pausing in the exchange of fires. It would be a temporary ceasefire that would entail the freeing of some hostages, not all of them, in exchange for Palestinian prisoners in Israeli jails, the return of displaced Palestinians to their homes, and a surge in humanitarian aid. So once that 6-week window is passed, then, in theory, what should happen is they move towards a permanent ceasefire. And that has been the big sticking point, Tom, because Hamas are saying that they're not going to enter into phase 1 until they have clarification on phase 2. Israel is saying that they're not going to enter into a permanent ceasefire discussion until they've actually completed their military objectives of neutralizing Hamas. So still a lot of sticking points. But the fact that the Secretary of State Blinken is there for the 8th time does underpin how important this is for the U.S. and increasingly so for the rest of the world with that UN security resolution as well.
OK, Blinken's 8th visit to Israel since this crisis. Bloomberg's Jumana Pasechi, thank you very much indeed with all the latest, of course, from that region, joining us out of Dubai. Horizons anchor, of course. Coming up, we're going to look at what's driving up oil prices. We shift to the commodity space, leading to the biggest rally since March. This ahead, of course, of an OPEC oil report. We get the details on the oil space. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, oil is steady ahead of an OPEC report that will provide a snapshot on the outlook for the market. It comes after crude prices rallied yesterday. Bloomberg senior energy reporter Stephen Stropczynski joins me from Singapore for the latest, someone who is always granular on the oil price. Stephen, thanks for joining us. What is driving the upside that we've seen in recent days around oil, and is it your expectation that that upside can be maintained?
You know, it's not terribly technical or granular, but it does seem that we're in sort of a buy-the-dip situation. When you look at just the technicals for Brent oil, prices were in the oversold territory after the biggest drop last week in about a month because OPEC Plus was adding more barrels to the market. There was this expectation last week because, you know, they're adding more from the fourth quarter onward. Later in the year, they could be adding as many as 500,000 barrels per day by the end of the year, and then 1.8 million barrels per day around this time next year. That together kind of fed this bearish attitude, and prices really started to tumble, kind of exacerbating a decline in oil prices since April. But now things have kind of jumped up, and people are looking at different things, right? Maybe this OPEC report that will be out later will show that was what was driving. The supply-demand situation is tighter, and that was driving Saudi Arabia and other OPEC Plus members into kind of looking at, hey, we're in a tighter market. We do need to bring more oil back into the market. And that was maybe part of the reason why they did it there as well. You had the U.S. Treasury throwing some sanctions on some shippers from Iran. While that won't have a huge impact on the physical prompt market, it is something to think about as there is what's happening in the Middle East and how the U.S. reacts to that conflict ongoing. Anything that involves Iran will increase prices to a degree. So that together is being viewed as what pushed prices up yesterday. Now, things are steady today. We're really going to have to get a clearer picture from other reports. The IEA will also be putting out a report which will kind of give an idea as to where oil supply and demand plays for the rest of the year. That will be key as to whether or not things continue from where we are right now. As well, I think I just want to also flag that air travel is also kind of picking up. We had a great story out on the terminal about how we're going to have a record year for air travel. Jet fuel demand is also rising. So that could be one of the bright spots in the market, despite somewhat lackluster demand in places like China.
Yeah, that's really interesting. OK, so we look ahead to the OPEC report out today, the IEA report as well, to kind of round out the picture and the detail coming through from those two institutions. And you're flagging the pickup in terms of flying and the demand. And the demand there. What else are traders looking for then in kind of the weeks and months ahead? What is the inventory situation looking like in the US? And what is the demand looking like out of China, Stephen?
Well, I mean, I think first going to demand out of the U.S., it's driving season, right? So I think that's going to be the big thing that people focus on. How much are people really going out? There have been some early numbers coming out that show that perhaps oil demand from driving in the United States is a bit higher than people had expected. What are those numbers over the next few weeks and months as people go on their summer breaks? What does that do to inventories? Or is it going to drain inventories in the U.S.? Shale output is still pretty strong. It has dropped from the peaks that we saw a few months back. But despite that, it's been pretty resilient. What's going to happen there? The Chinese demand picture is, of course, complicated. There are part of that travel story. As jet fuel picks up, a lot of that travel is Chinese demand as well. You have to look at their imports and the refinery run rates as well have been not exactly what the industry had been expecting. And that presents sort of a bearish picture. But on top of that, I'm sure this comes as no surprise to you, a lot of eyes will be on the Fed. What the Federal Reserve does, if they decide to hold interest rates, when they decide to cut, if there's any hint to that later this week, that will affect the dollar, and the dollar affects crude oil.
Yeah. The Fed looms large, even in the oil space. Stephen Straczynski, thank you very much indeed with the analysis on what is moving oil at this point. Coming up, we're going to take a closer look at the UK's quantum computing sector. We're going to speak exclusively to the CEO and founder of New Quantum. That's coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. Happy Tuesday. I'm Tom Mackenzie in London. These are the stories that set your agenda. Apple reveals its AI play, the iPhone maker announcing a partnership with OpenAI and a slew of new features. Elon Musk responds by threatening to ban Apple devices from his companies over security fears. The S&P 500 closes at another record high as investors turn their attention to the Fed, with the FOMC beginning its two-day policy meeting today. Plus, British Prime Minister Rishi Sunak's cabinet lobbies him to add last-minute big-ticket tax cuts to his manifesto. amid growing disquiet over a lack of show-stopping announcements. This as we count down to the latest wage data out of the UK. Let's check in on these markets then. We saw a sell-off, of course, across European stocks yesterday, largely on the back of the surprise announcement from President Macron that he was calling parliamentary elections. And, of course, the CAC 40 fell more than 1%. We look to make up some of those losses today, with European futures pointing higher by 0.2%. The next focus, of course, in the UK is on that wage data, expected to come in, ex-bonuses, a little higher than the previous reading, and, of course, the implications for the Bank of England, with just over one cut so far priced in by the market. So that data crosses in a little under 30 minutes' time. The FTSE 100 currently flat in terms of the futures picture. S&P futures pointing to losses of 0.1% after notching, as we said, a fresh record yesterday, despite the drop coming through from Apple of around 2%. Nasdaq futures pointing lower by 0.1%. Let's flip the board, look cross-asset. The euro, of course, taking a hit yesterday, and currently euro-dollar at 107. A little bit more stability coming in for the single currency. 4.45 on the US benchmark 10-year. We do have an auction of 10-year treasuries later today, so we'll see how well the market absorbs that auction. Brent currently trading at 81.48, down 0.2% ahead of an OPEC Plus report on the oil industry. And gold, 2,300. The yellow metal currently down 0.4%. And, of course, that asset could be sensitive to what we hear from the Fed and that decision. And, of course, any revisions to the dot plots come Wednesday. Let's get back to the tech story, though. Apple finally unveiling its long-awaited new AI features, including a partnership with ChatGPT maker OpenAI. The push also includes a revamped version of Siri, the company's once pioneering digital assistants. A lot of lifting being done by the word once there. Bloomberg's Jackie Davalos has more from Apple's Worldwide Developers Conference in Cupertino, California.
Today at the Worldwide Developers Conference here in Cupertino, California, Apple unveiled its highly anticipated AI platform called Apple Intelligence. This included a slate of new AI features, including an upgraded Siri. This upgraded Siri will be able to take action on users' behalf using just voice commands and better understand natural language. Other AI features inside the new operating system include summarization capabilities, transcription tools inside voice memos, as well as AI-generated personalized emojis, also called Genmojis. Apple also announced a partnership with OpenAI, which will enable Apple to use the powerful ChatGPT model. Users can access ChatGPT to compose text at no extra cost. These features will only be available to users with the iPhone 15 Pro or Pro Max, as well as users who have iPads and MacBooks that are equipped with Apple's M-series silicon chips. So if users want these features, they're going to have to upgrade. A key part of this AI strategy is its emphasis on privacy. Apple said most of the AI processing will be done on the device locally, but also some of the work will be done on the cloud. And in that case, Apple said that data will not be stored and it is not accessible by Apple for further training. Apple's announcement today also drew reaction from billionaire Elon Musk, who said he would ban Apple devices from his companies if OpenAI integrated its technology in Apple's operating system, calling the tie-up a security risk. I'm Jackie Davalos in Cupertino, California.
OK, staying on the tech story, and the CEO of startup New Quantum says the UK is emerging as a world leader in rapidly evolving quantum computing technology, but continued government support is essential if the nation wants to produce the industry's first version of Microsoft or NVIDIA. New Quantum's founder and CEO Carmen Palacios-Berraquero joins me now for an exclusive conversation. Thanks, Carmen, so much for joining us in the studio. That's some ambition there for the UK. We can have our own quantum computing in the size and scale of a Microsoft or NVIDIA. We're a long way from that right now. Tell us about what New Quantum does, though, and what the potential economic impacts of quantum computing could be.
Absolutely. Thanks for having me. So I spun out New Quantum about 5 years ago out of one of the world's best quantum networking groups at the University of Cambridge. And we've been developing the quantum networking infrastructure required to massively scale up quantum computers. So we're bringing about a similar moment that happened in classical. So we had mainframes and single computers, and then suddenly we had the power to interconnect them and build things like the cloud, which brought about massive economic value. And the cloud is as much about those computing chips as about the networking layer and the orchestration at the data center level. So that's what New Quantum is building to scale up computers.
Yeah, and it's the networking that you guys really specialise in. Give us a sense of the time frame. There's been a lot of talk about quantum computing and the potential implications. How far away are we, do you think, from having a fault-free quantum computer at scale, at size? Because these are more volatile machines. This is more volatile technology.
Correct. Quantum computers are hard to build, they're noisy. And first, I would like to debunk this myth that quantum computers are always 10 years away. The industry is barely 10 years old. Most startups actually were founded in 2017 and 2018. And in the past 6 years, we've made huge progress deploying small systems in data centers, getting to hundreds of qubits. And now we're in this shift, this scale-up moment for the industry, where now, for the first time, we have a roadmap to that commercially disruptive computer. And roadmaps point to around 2033, 2034 for that moment. And that computer will revolutionize many industries. For example, it will make cybersecurity systems, as we know them today, vulnerable to quantum computers.
Okay, so 2033, 2034 is potentially the time frame that we're looking at, and you touched on some of the sectors that could benefit from this technology. Talk to us about the UK's role. We had an introduction to this segment that the UK is well positioned. What has gotten us there? What more do you need to see within your sector to continue to keep the UK ahead, or at least on the front foot when it comes to this?
Yes, so the UK is today a world leader on quantum on many metrics, so number of startups, funding, number of patents. It's consistently top 3, and the reason is that we have a very good scientific basis. A lot of quantum science was developed in the UK. This is why people like me came to the UK to join that. And crucially, the government has had great strategy, pioneering strategy. So 12 years ago, the government announced a first 10-year quantum strategy with £1 billion behind. Actually, most countries in the world have followed through and based their own strategies on the UK strategy. The UK renewed that last year, and they announced another 10-year quantum strategy.
Is talent a challenge? I'm just thinking, Brexit. You obviously came here from overseas. You're not from the UK. That talent, that overseas talent. This government has talked about restricting student visas from some countries, like China. Is that a potential roadblock for this industry?
For a really fast-growing industry, talent is one of the key risks, and the UK attracts top talent, but of course issues like visas and certain geopolitical restrictions continue to make that a bigger risk than it was before. Talk
to us about the funding environment. You guys raised, what, £8.5 million last year. How willing are investors to get behind this kind of project in this sector, particularly as AI draws a lot of the attention? Is AI sucking away a lot of the funding? Are you missing out? Is there a bit of a drought because of this obsession with all things AI?
Well, in the UK, we've got great deep tech investors. Some of them have invested in New Quantum, and there have been billions invested in the quantum industry. And even with the downturn in investment in tech in 2023, quantum investment actually held up. So there are still large funding rounds in quantum, and we must make sure that they continue for the long term.
Okay, so AI is not crowding this out yet?
Not yet.
Okay. Carmen, thank you very much indeed. Really fascinating business and, of course, the prospects around the UK within quantum. Carmen Palacios-Berraquero, New Quantum founder and CEO, and a really fascinating technology and, of course, the UK's leading role, at least for now, in that. Talking of the UK, Prime Minister Rishi Sunak faces last-minute calls by cabinet ministers to add new tax cuts and a tougher migration policy to the Conservative manifesto. We just touched on that and the implications for the tech industry. Bloomberg understands that early drafts provoked disquiet over the lack of big-ticket pledges that might prevent a heavy defeat ahead of the July the 4th general election. We are joined now by our UK correspondent, of course, Lizzie Burden. Lizzie, what can we expect from the manifesto then? There's been wrangling. Not a huge surprise. There's been tension over this. What do we know about what is going to be detailed in that manifesto?
Well, I know I say this every time I come and stand here with you, Tom, but this is one of Sunak's last chances to close that poll lead with Labour. He's getting attacked on the right by Reform, led by Nigel Farage, who, of course, brought down his predecessors, Theresa May and David Cameron, and he's got the attack from the left, from Labour. So in terms of this manifesto, manifesto, we're expecting a cut to stamp duty for first-time buyers, a further cut to national insurance, the payroll tax by 2 percentage points. But the trouble is, like that surprise election announcement, this manifesto appears to have been drafted by a small group of top Sunak aides. And beyond that circle, as you say, there is wrangling, there is frustration that Sunak isn't going far enough to oppose the Reform Party, for example. They would want a cut to inheritance tax, for example, and they say that cutting national insurance for a third time, when it hasn't seemed to move the polls the first 2 times, is, to paraphrase a Tory aide, the definition of insanity.
All right, the definition of insanity. One view there, of course, on that manifesto pledge and the thoughts going into it. What about the Liberal Democrats then? One of the other opposition parties here coming out with their manifesto. We do have that now. We have the details on that.
Yeah, we got it yesterday. Essentially, bigger tax cuts, tax rises for the rich, for frequent flyers and for banks as well, to raise about £10 billion, and this to fund care and also the National Health Service. They also, interestingly, want to rejoin the single market when it comes to the European Union to boost trade and growth. Now, this is the other threat to Rishi Sunak. I've talked about the left and the right. This is the threat coming from the south. We're not likely to see, as you can see him on the screen there, Ed Davey, the Liberal Democrat leader, as the next Prime Minister. The polls suggest that the Lib Dems would come in fourth behind Reform. But what they could do is win enough seats to influence the shape of the next government if there is as close a result as there was in 2010 or 2017.
Meanwhile, to the economic data of the UK and the Bank of England and expectations around where the Bank of England lies in terms of its rate cuts, we may get more of a steer on that with the wage data out at 7 a.m. UK time. What are you going to be scrutinising out of that data set?
Yeah, you're right. At 7 a.m. we'll get the latest jobs numbers. The picture likely to be uncomfortable, but not uncomfortable enough to stop the Bank of England cutting rates. So a similar picture to the ECB. Of course, we had their first cut last week and all of the disquiet around that because of one of the things being the rapid wage growth. That is likely to be the same situation here. Sticky wage growth in the 3 months to April, 6.1% is the number that we're looking for. Why? Well, of course, we had that rise in the national minimum wage in the month of April as well. But, as I say, not likely to put the Bank of England off cutting rates. Our economists expect the first cut in August. The only one that's fully priced at the moment is November, June off the table because of the election, essentially. But it'd be interesting to see the new pricing when we get it at 7:30 a.m. London time.
OK, UK correspondent Lizzie Burden, thank you very much indeed on the politics and what to look for in that economic data dropping, as she says, in a little over 15 minutes' time. We'll be breaking that live for you. Coming up, EU leaders are eager to resolve top jobs after the elections across the continent, but French President Emmanuel Macron's snap legislative vote could delay decisions. We are live in Brussels for the latest. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, after Ursula von der Leyen's party won the most seats in the EU elections, she will be looking to clinch a second term as European Commission President. That's as EU leaders look to resolve top jobs and the conversations around them as soon as possible. And those conversations continue. Joining us now is Bloomberg's Oliver Crook, who's in Berlin, has his finger on the pulse of all these machinations. Ollie, the EU Parliament then, what are the votes? What are we looking at in terms of the votes, the next steps? How is this all shaping up at this point?
Yeah, that's right, Tom. It's really Ursula von der Leyen's to lose at this point, with the EPP coming in as number one in the vote, as we've been discussing yesterday. And really what's happening right now, probably as we speak, is what all the individual parties, what blocks are they going to actually fall into? And we've actually had some forward steps on that. For example, the AfD, which did so well in Germany, winning about 16% of the vote, that have now 15 seats in the European Parliament, they had been ejected from the ID group because of comments made by the leader, Maximilian Krah, who had basically said that not every member of the SS was a criminal. criminal. He has since then been ejected himself from the AfD, which is clearly in part for them to sort of clean up their party in order to be eligible to be back into some of these groups. So that's what happens now. Then what happens on Monday is all these EU leaders who will be sitting at the sidelines of the G7 meetings will get together and speak to one another about who gets the top jobs of the Commission. And what is interesting now that we got from the vote and the outcome, and so sort of how poorly Emmanuel Macron did, for example, remember at some point he was floating, oh, maybe we'll get Mario Draghi in to come into the Commission and shake things up. He's really not in a position to shake things up right now. Who is in a position potentially to shake things up is Giorgia Meloni, who has, as a national leader, probably the strongest mandate out of these EU elections.
And when it comes to President Macron, the gamble that he took over the weekend, we have a bit more clarity in terms of the polls coming through for Le Pen and her party. What kind of fine line is this French president walking at this point, Macron?
Tom, I think it's an extremely fine line. I think it's a very difficult thing for him to sort of try to pull off. And I think that it's, characteristically brash and sort of Macronian fashion. But I'm not sure that the calculus is, as sound as one would anticipate. As you could see there from the board there, this is a poll that was taken yesterday about the legislative election. This is not to do with the EU election. This is how French would vote on legislation election. As you can see, the Rassemblement National, Marine Le Pen's party there, is #1 at 34% of the vote. We should say that currently at the Assemblée Nationale, which Macron just dissolved in order to call these legislative elections, they only had about 15% of the seats, 88 seats, right? So that would be more than doubling what they've got right now. And it seems to me, and everything that we've sort of seen in the last couple of days, that his gamble relies on a couple of things. One, that the French will not be willing to vote at the national level what they're willing to vote at the EU level. And two, this sort of age-old tradition in France of basically saying that we will sort of form a bloc against the National Front no matter what happens, if they ever come sort of that far to power. The other is sort of some speculation that, maybe bring them into government and their sort of incompetence will be displayed because they've never governed before. But I think that fails to appreciate a couple of things. The first is that these are legislative elections. They're seen as lower stakes than the presidential, so maybe people are more willing. It comes at a time when in Europe we've seen a sort of willingness to vote much further to the right than you have over the last couple of decades, and that all could sort of culminate for Macron in a quite unpleasant surprise in, Tom, what is a vote that is only a couple of weeks away.
Yeah. Is it a protest vote? Was it a protest vote? Or has Marine Le Pen and her party crystallised 30% plus of the voter population of France? Bloomberg's Oliver Crook in Berlin with the latest in terms of how the talks are unfolding across the EU and this fine line that the French President Macron is walking. Now to some other stories making news this Tuesday. The European Central Bank President says last week's rate cut will not necessarily be followed by further rapid moves. Speaking with European newspapers, Christine Lagarde said the bank must stay cautious and there is no predetermined trajectory for Eurozone borrowing costs. The ECB lowered its key deposit rate to 3.75% last Thursday, as widely expected, against a backdrop of higher inflation projections. PIMCO co-founder Bill Gross says the election results in Europe are presenting opportunities in European bonds. Gross spoke to Bloomberg as results rattled markets and sent French bond yields to their highest mark this year.
I think in terms of an attraction, German 10-year Bunds and French Oats, the 10-year there, their spreads have narrowed significantly in the past month or two relative to treasuries, and today as well by 8 or 10 basis points. So there's coming a point where European bonds are more attractive than treasury bonds, in my opinion.
Southwest Airlines is the latest target for Elliott Investment Management. The activist hedge fund has taken a nearly $2 billion stake, about 11% in the carrier, and wants it to change up management and undergo a comprehensive business review. Since April, Elliott has unveiled new stakes in companies including SoftBank, Texas Instruments and Anglo American. Plenty more coming up. This is Bloomberg.
I think the market basically anticipates the Fed to stay, and maybe in September, maybe in December, maybe 1 or 2 cuts if, the current numbers continue as we've seen them.
PIMCO co-founder Bill Gross speaking with Bloomberg's Alex Steele on his views around the Fed and where they go next. Well, the S&P managed to notch up a fresh record. We've had more than 24 records now for the S&P so far this year. Fresh record yesterday. Modest gains, but another record being pushed up, helped by Nvidia. The stock split coming there 10-1. That lifted the gains as well that came through for the S&P. All in the week, of course, when you get that decision from the Federal Reserve tomorrow and the revisions, the expected revisions around the forecasts. MLive's Mark Cranfield telling us that this equity market remains relatively resilient, even if they go from 3 to 2 to 1, even to 0. He expects the equity markets to be relatively resilient. JP Morgan pointing out that options markets are suggesting, in terms of the trading, you could see moves of around 1.3% either side for the S&P, higher or lower by Friday, on the back of some volatility around Wednesday, which is, of course, a crucial day for these markets this week. Let's flip the board and have a look at what is happening with the euro, which, of course, took a hit yesterday, the single currency lower yesterday on the back of that news from President Macron. And what we're seeing is that one-month risk reversals still pointing to further weakness for the single currency. And whether or not the dollar has priced in enough when it comes to adjustments from the FOMC is a key question for the euro as well. It's the politics, it's the greenback as positions build for further weakness in the single currency, which is down around 2.5% year to date versus the US dollar. Let's flip the board and look at the UK data story, though, because that is dropping in the next few minutes. The Markets Today team will be breaking that and giving the analysis. The view is, the expectation, the median survey from Bloomberg, and you can see that is the light blue line, is he going to get a print ex bonuses for the most recent month of 6.1%. That's a marginal tick up from the previous month of 6%. What that does around expectations for the Bank of England, as markets price in, they don't fully price in the markets a full cut from the Bank of England until November, a full 30 basis points priced for this year. Bloomberg Economics thinks they could go as soon as August. But again, the wage data and the earnings data out of the UK could be consequential for that. That breaks at 7 a.m. UK time. We're also going to be looking on markets today at one of the world's largest market makers entering the European rates market. We're going to speak exclusively with the global head of rates trading at Citadel Securities, Michael DePass. That's at 8:30 UK time. Markets Today is next. This is Bloomberg.